Hi everyone, it's Charlie from Bricks and Bytes, bringing you the latest Bay Area housing and economic snapshot as of November 2025. There's been a lot of movement lately, mortgage rates shifting, the Fed's adjusting policies, and stock markets hitting record highs. Let's break down what's happening and what it could mean for Bay Area real estate heading into the holidays. Let's start with the big picture, interest rates and home sales. Now, since peaking in 2023, the 30-year mortgage rates have generally trended downward. And as you know, when rates fall, buyer activity tends to rise. In the Bay Area, home sales volume bottomed out in 2023, but has been gradually climbing since. There's a clear sign of renewed market confidence, even if the overall sales levels are still below the frenzied pace we saw during the pandemic years. So what's driving the momentum? Part of it comes from the Fed's recent rate cuts, and as borrowing costs ease, more buyers are coming back into the market, particularly in the high-demand areas like Silicon Valley and San Francisco. Luxury homes and stock market. Now, since the late 2023, the S&P 500 and Nasdaq have seen huge rebounds, climbing roughly 50% or more in the past 2 years. And as stock portfolios grew, so did the demand for luxury real estate. In fact, Bay Area's luxury home sales properties over 3 to 5 mil jumped almost in sync with the S&P 500. Over this period, luxury sales rose by nearly 50%, reflecting how closely high-end real estate is tied to investor wealth. Now, when the markets surge, affluent buyers act fast. And the Bay Area's most exclusive neighborhoods are often the first to benefit. Home appreciation, big homes versus small homes. Now let's talk appreciation. Between 2023 and 2025, we saw strong value growth across the board. But the biggest winners were large luxury homes. Homes in between 4,000 to 6,000 square feet appreciated around 11%, roughly double the rate of median home size between 1,500 and 2,000 square feet. Why? Now it ties all back to stock wealth and affordability. Larger homes became the go-to for affluent buyers, cashing in on market gains. Now, while middle-tier buyers were still squeezed by lending costs and limited inventory. To the Fed, the driving force behind all of this. On October 29, 2025, the Federal Reserve reduced the benchmark rate by 25 basis points for the second time this year. But Chairman Jerome Powell cautioned that another cut in December isn't guaranteed. The translation: while rates may ease further, the Fed's still watching inflation really closely, and that could affect how quickly mortgage rates continue to drop. Short-term rate movement. In the short term, rates have been bouncing around. The weekly average rate ticked down slightly this week, while the average daily rate moved up over the past few days after hitting a record low on October 29. We're still hovering around the 6.2 to 6.3 range for most conforming loans, which is the lowest in over a year. That's keeping refinancing and buy activity alive, especially for move-up buyers waiting for better affordability. Stock market and consumer confidence. Now, turning back to the financial markets, both the S&P 500 and Nasdaq hit new all-time highs in late October before pulling back slightly. Now, this rally has boosted wealth among higher-income households, but for many middle-income buyers, confidence remains fragile. Consumer sentiment data from the University of Michigan shows that overall confidence is still near historic lows. People are worried about inflation, prices, and increasingly job security. However, affluent households are bucking the trend. Their confidence, fueled by market gains, continue to translate into luxury spending and real estate activity. So here's the takeaway. Mortgage rates are easing but still volatile. The Fed is still signaling caution and not a free fall. Stock markets are soaring, lifting high-end demand. And overall buyer confidence is slowly returning, especially in the upper tier. Now for the Bay Area, that means a gradual, wealth-driven recovery, one that favors equity-rich buyers and well-priced listings. If rates continue to drop into early 2026, we could see the next big upswing in both sales volume and price growth. And that's your market house. If you found this update helpful, hit the like button, subscribe for more Bay Area real estate insights, and drop your questions below. I'd love to hear your thoughts on where you think rates are and prices are headed. I'm Charlie Giang with Bricks and Bytes, helping you build the future one brick, one byte at a time.